hate to say it, but if you're buying off-plan in Dubai this year, chances are you're overpaying. So if you're thinking about investing in Dubai off-plan right now, listen closely because we're at a very interesting moment in this market. Developers are still pricing at record highs, but the market isn't moving like it was. The excitement's there, but the numbers, they're starting to crack. And hey, that doesn't mean that Dubai property isn't exciting anymore. You just got to be more careful and intelligent. In this video, I'm going to break down what's really happening beneath the surface. We'll deep dive into the latest data from Business Bay and DIFC, two of the most active zones, and we'll show you how to spot overpriced launches, cut through the marketing, and make sure your investment actually holds up in the real world. If you're serious about buying, this video can literally save you from a very huge mistake. But before we start, don't forget to leave a thumbs up, subscribe to see more of these videos in the future, and let's get into the video. Let's start where the market stands right now. According to Dubai Land Department, DLD, and DXB Interact, the Dubai market has actually stayed resilient in 2025, but it's evolving. Sales volumes remain strong, especially in the ready segment. Most interestingly, rental yields are holding really firm across many areas. Off-plan launches, are still happening, but the momentum has shifted. In Business Bay, the transactions on off-plan are actually down 5% year on year. Median price per square foot in Business Bay on off-plans is about 2,500 dirhams, while ready units sit at around 1,750 dirhams. That's a 44 dirham PSF premium on off-plans, despite very similar rental potential. In DIFC, on the other hand, the price per square foot has exploded at 3,800 dirhams per square foot on ready sales, with high net worth buyers driving the market. Transaction volume is also up at 136% year on year, but yields remain compressed due to high service charges and unit sizes. Key takeaway, the market is stable, but with some trends changing. Investors are chasing growth in areas such as DIFC, while affordability and rental yield remain much stronger in mid-tier areas such as Business Bay, Al Jadaf, downtown. Meanwhile, the off-plan prices are outpacing any kind of fundamentals. Let me be real with you. Since mid-2023 through 2024, developers were launching projects like crazy, especially in Business Bay, DIFC, Al Jadaf, and JVC. And the pricing, have you ever seen this trend? That it was always higher than the previous one. Even for worse quality projects, developers like Bingati have launched over 5 projects in Business Bay alone in under 18 months. Names like Trillionaire, Aquarise, Crest, and Galaxy all stacked back to back. The psychology was simple. Hype, price increase, new launch, repeat. And it worked for a while. But now, in mid-2025, I'm seeing something interesting. Off-plan prices have actually plateaued. New launches are no longer selling out instantly. The summer slowdown has definitely exposed the fragility in the inflated prices per square foot. And developers are engaging in so many extra activities with bringing stars and promoters to push these projects because they won't sell as well as they did 2-3 years ago. So why is this happening? Well, there is also a seasonal dip because you know that Dubai is always slowing down during summer. Developer quotas are also filling up. Many Tier B developers now actually face buyer fatigue. Investors are getting smarter, finally asking, is the price justified? Here's some evidence that the off-plans are overpriced. Let's break it down with actual market data, which you can, by the way, access at any time through the DLD official website, DXB Interact, or any other websites that pull the data from the official Dubai Land Department sources. Since January to July 2025, in Business Bay alone, the off-plan median PSF was about 2,520 dirhams. The ready median price per square foot was about 1,750 dirhams. The difference was 44%. That's pretty huge when you are actually supposed to wait for that property to be handed over until you actually make some money of it. A 44% premium, yet all the rental yields and appreciation is still even better in the ready units. Some off-plans like Bengati Aquarise or the new Bays are pushing 2,800 to 3,100 dirhams per square foot, while resale units in Peninsula, Reva, Prive are available for about 1,800 to 2,200 dirhams per square foot, with faster handover or already being handed over and ready rental tenants. On the other side, in the AFC, the off-plan prices have absolutely exploded in the off-plan segment, with the PSF as high as 4,800 dirhams per square foot. Rental demand is strong, but the yields are compressing. Most one-bedroom units, you check it by the way, are only yielding around 4.5 to 5.5%, far lower than what you can get in Business Bay and other mid-tier areas. Here's the real problem. Off-plan pricing is being driven by developer initiatives, post-handover payment plans, and the mindset of buy now, flip later. But there's no guarantee those flips will eventually happen. In fact, we're seeing a rise in the resale listings from investors desperately trying to exit those investments before handover, not because they want to flip it quick. Well, here's your warning sign. So, how to avoid overpaying? Compare PSF to ready units in that same area. Don't just look at brochure pricing. Ask how much a ready unit with a similar size and view would actually cost me. If the off-plan price is 30 to 50% higher, something's obviously off. Ask about service charges, layout, and handover timeline. High-end finishes and big lobbies sound great, but what's the net rentable space? And how much are you really paying after all the DLD fees, registration, and service charges, which are sometimes going off the roof? Avoid projects that rely solely on hype. That's an obvious one, but still it's good to remind you every time. Look for real buyer demand for actual units that will perform well in the market according to the neighboring units at least. And if the only selling point is the developer's name, well, run. It's not the most important thing nowadays. Identify who's actually buying. Who are you competing with? If 90% of buyers in that specific unit are speculative flippers, then probably you're not looking at the best project. In the moment sentiment shifts, the project could literally collapse. Every one of those buyers will start selling, and you will basically eventually end up with a project that is no value to you or to the tenants, or you won't be able to sell it at a higher price. Finally, work with people who know what you have to avoid. That brings me to a key point. Don't do this alone. Honestly, it will save you a lot of money and, most importantly, a lot of hassle and psychological nightmares. This is why I partner with Silver Springs Properties, a boutique agency in Dubai run by actual investors, not salespeople. Their team come from a financial background and run through financial analysis on every single deal. They help clients compare off-plan with ready units, calculate true ROI based on rent, and avoid emotional buying based on simply renders. If you want to work with a team like that, check out the link in the description and reach out to Silver Springs Properties right now. And if you're a cash buyer, serious investor, or simply someone who doesn't want to overpay, then book a 101 strategy call with me right now. I'll help you compare multiple developments, check out some real data, and most importantly, source you specific under market priced units that me and my network has to offer. And that is actually off market and will perhaps never hit the market, and you will never see it. You'd be surprised how many amazing deals are off market if you know where to look. So now let's wrap it up with a couple of key takeaways. The Dubai off-plan market is still very strong, but not every launch is a good one. And by now, I think you know this already. PSF premiums are not often justified, especially in areas with already strong rental supply. Look in the micro location and compare the PSF for off-plan and for ready properties. Use data, not emotions, and avoid falling for the hype machine. Dubai is honestly one of the best places to invest in real estate right now and has helped me and many of my friends and clients really build their property portfolios and run amazing businesses remotely while having their rental payments being transacted completely fairly and on time in Dubai. It's such a good market where everything is regulated. So definitely don't lose this opportunity and get into the market as soon as you can. Nevertheless, if you found this video useful, as always, please leave a thumbs up, subscribe for more videos in the future. And with that, I will see you in the next one.